Hey guys, welcome back. Tech 702, Mike again on the mic, and this is video number 4 in the How to Crypto series. Today we're going to talk about TA, that's technical analysis, just a fancy way of saying basically we use numbers, maths, and graphs to try to guess what the market is going to do. A lot of this is tried and true. There's hundreds of different indicators out there. The goal of this is to find 2, 3, 4 of them that work for you and apply those. And the important thing is with all of these, you want to record your trades. So you want to maybe use an Excel spreadsheet, something like that. You want to mark down what you bought, when you bought it, what you sold it for, and then also mark what you were expecting to make from your rate of return. So as I've said before in previous videos, we never go into a trade without a plan. We know what we want to make percentage-wise. We know our time frame. And you just want to mark how accurate each form of TA is and try different ones, and then that way you'll learn which one you're good at, because some things are more advanced than others, or some things you just suck at. I suck at most things, so it's okay. Anyways, this is a little bit dry, but I'm going to keep it very short as usual, to the point, and this is not an end-all be-all, so don't flame me in the comments for you experts out there. This is just to whet the appetite, explain the extreme basics of trading, and using technical indicators to do so. Okay, so let's get straight into this. The first thing we're going to use here is Coinbase Pro. I'm going to jump between this and TradingView. I highly recommend you use TradingView. It's a website and an app. It has most of the features are free, but it has some really cool stuff that's paid. And if you're going to be serious about trading, it's something I recommend. I don't get anything, not sponsored, just mentioning that. TradingView is super helpful. So as you see here, we have our charts, we have everything going on. The first thing we want to look at is our time frame. So as you've seen from the previous videos, you can set time frames. In Coinbase's case, you can see 1 minute, 5 minute, 15, 1 hour, 6 hour, 1 day, etc. And these are important because when we're doing our technical analysis, you want to use the time frame that is relative to what you're doing. So for instance, if you're a day trader, you're not looking at a long-term trend. So you're looking at maybe doing a 5 minute, a 15 minute, or a 1 hour probably at the most if you're day trading, because you want to see the trends intraday. If you're a holder, or if you're a swing trader, or if you're looking for a longer play, you're going to move out in time, and you're going to probably start at 6 hour, 1 day. You'll see in TradingView you can do 5 day, 1 week, 1 month, stuff like that. So it's very important that we select the appropriate time frame that we want to consider when we're doing our technical analysis. Now, moving on, you want to look at support and resistance levels. All that means is where are the orders at? And in this case, this is a graphic illustration of the orders, green being buy, red being sell over here. And you can adjust it on scale, if you see over here on the side, to how many orders are present at each price point. So here's the sliding scale from 0 all the way up to whatever people are trying to sell it for, probably around 80 grand. I think it's the top end right now. But you can see if we adjust, there's walls. And these are what's called a buy wall, if you see on this side, or a sell wall on this side, meaning there is resistance or support. So if, in this case, we're on Bitcoin. If Bitcoin started crashing right now, all of these are going to start buying and all of these are going to start selling. But where does it stop? And that's where you look at where the buy orders are. You can see primarily there's a wall here at 54,900. So your first consideration for support would be 54,900 from this current price. Conversely, on the selling point, if it started streaking up, it's going to hit a sell wall and it's going to stop there. So that's basic support and resistance, just using the order book to kind of get an idea of what's going on trend-wise in addition to the current price. Okay, the last thing I'm going to show you here on the Coinbase Pro application is if you go here to overlay, there's EMA 26 and 12. Those are moving averages for 26 and 12 days. And what that shows you here, you can see the lines, that's the trend lines for the moving averages. Now, how do we use this for technical analysis? Some people disregard it, but as a very simple way to look at it, these lines tend to constantly converge. So this is the 1 hour. You can see there's some separation. When it's below both lines, they tend to gravitate up. When it's above, it tends to gravitate down. Let's go out to the 1-day moving average. You can see this play out. So you can see as the price here of Bitcoin dropped, obviously it falls below the average. It tends to reconstrict toward the average. When it jumps out ahead of the average, it comes back down. So it's a self-fulfilling prophecy. It is a cool indicator, but it's very, very novice, basic indicator. The moving averages constantly converge. So if it's above, you can count on it going back down. If it's below, you can count on it going back up, assuming the market isn't in a devastating crash or an out of control bull run. Here we are over in TradingView, and I pulled up Dogecoin just to have some fun here. Again, we're on the 4-hour Bitrex server. It doesn't really matter. You're going to pull up the exchange that you're using, and you're going to pull up the time period that you care about. But for starters, we're going to talk about RSI, the relative strength at index. This is the average days the coin has gone up or down and the strength of that purchase price. So basically, as a rule of thumb, if it's below 30, that means that the coin is undervalued. If it's above 70, it means that the coin is overbought. And you'll see these trends will constantly reverse. So this pink spot here provided on TradingView pretty much shows the middle zone, so you can see where it's tracking. Again, just another indicator. And we stack these indicators as a way to verify our TA from another indicator. But you don't want to step on too many. You just want to do this to confirm whether you think something is too high and it's going to go down, or something is too low and it's going to go up. Just one more tool in the bag. Okay, so let's get into this segment. It's on Fibonacci sequence, fib retrace, stuff like that. I'm going to keep it super simple because there's a lot of dynamics to this and different schools of thought. But I just want to familiarize you with the basic concept so that when you see it out there, or if you want to research it, you kind of know what you're looking at. So Fibonacci sequences are numbers that occur in nature. They repeat themselves all over the place. And it turns out they actually apply to finance and trading. So they're different support levels based on percentages. And the way we're going to use these is you can use them to determine trends, to cross-check against your other indicators to see if what are good buy and sell points, what are good stop loss points, stuff like that. So I'm going to show you just the very basic over here. We're just going to go in here, fib retrace. Now, if you're charting a downward trend like this, you're going to start at the top and go to the bottom. If you were doing a upward trend, you would do it the exact opposite. So you want to get to the very bottom here. You see this little bottom candlestick, and we're going to just cover that up. And so over here you have the Fibonacci percentage numbers. 50% is not a fib number, but it's included with trading because there's some kind of weird voodoo about something recovering half of its value. So you can see here, here's our downward trend line, and these are all relevant numbers. And if you notice, even on the short term, we're on a 4-hour right here, you can see that it pretty much gravitates to levels, and then it will break through to the next level, and then it will stop at a level, etc., etc. Right now, man's land, you can see the price right here at 55,000. So I wouldn't take action on this till I saw what was going to happen with the trend. Typically, what I want to see in a downward trend is I want to see it recover over 38.2 before I start looking to believe that it's going to reverse. That's me. Again, different philosophies, different things like that. And if I'm moving through 50%, I'm going to buy and I'm going to unload in this zone back up here and try to get my 10 to 15% if that's what I can get away with. And then additionally, for people, there's other strategies where this continues on and on and on. If it were to break out, and there's different levels of support and stuff like that. So essentially, it's just a complicated math problem using fib sequences that naturally occur, and you're looking for these levels. The only thing that I will say in addition to this is when you're setting your buys and sells, notice that these trend lines tend to happen. Like you can see the 61.8, it held there, right? And it holds at different levels. It just happens over and over. Doesn't matter what the coin is. It's just something that occurs. But I will say this, you don't want to set your level in no man's land. So when you're doing your TA and you think your coin is overbought or underbought or whatever you're going to do, buy or sell, you want to check these levels and you want to make it just in front or just behind one of these levels typically. Again, not telling you what to do, different strategies for different folks, because it will tend to gravitate toward these lines. So if we're looking at Bitcoin right now, and I was using this chart, This purple and this green line right here are my moving averages. And as I spoke about previously, they tend to converge, right? And right now this would indicate that clearly we are under the moving average. And then if we compare it down here, oops, I'm using ad free. The RSI, our strength index, is showing we're right around 30. So this would indicate to me that the coin is underbought. So basically all signs are showing underbought, that it's a good value to purchase. However, we don't want to necessarily buy it until we get out of no man's land and give me more indications of buying. So I would go cross check right now the volume of orders to see where the buy and sell walls are, right? See if that's coming down the line. I might cross check social media, which we'll get into in the next video, and stuff like that, and other indicators to confirm that. But right now this would be a good value to buy, assuming that we are expecting it to reverse the trend. I'm not seeing that indicated right now, so I'm going to wait on this one and sit until I get a confirmation that it would be a good buy for me. Again, others may not agree. I don't know everything, but just to give you an idea, this is just another tool that we use in our toolkit to accomplish doing technical analysis. So there you have it. That is the very, very down and dirty version of how we do TA. If you have any comments, questions, stuff you want to add, teach me something, throw it down below in the comments. Subscribe to the channel for the next in the series. Next, we're going to talk about social media implications, because here's the best part. You can do all the studying in the world. You can be the mathematician genius, but when Elon Musk tweets or a Reddit group decides something's going to happen, it's going to happen, and it violates all orders of the universe. This stuff applies to when you're on your own and you can't make a decision, or you're looking for that vote of confidence to make the trade. That's all it is. Anyways, appreciate your guys' time. Until next time, I'm out of here.